Tesla's taking a tumble again today after dropping another 4%. It's now down nearly 40% in the fourth quarter, putting it on pace for its worst quarter ever. And take a look at this. Over the last 2 years, Tesla has shed more than a fifth of its value. GM, meantime, is down just 7%, and Ford is up 50%. So as Tesla's troubles open the door for legacy names to get in on this EV boom, let's welcome CNBC contributor Mark Fields. Mark was formerly the Ford CEO and most recently interim Hertz CEO. He still sits on the board there. Mark, great to have you in the house here at the NASDAQ market site. What do you think? Do you think that Tesla's stumbles, do you think that Tesla's reputational damage, there are recent polls saying that the negative comments are slightly eking out the positive view of Tesla, all that will help GM and Ford in this EV race?
Well, I think on balance, you have to look at this relatively and saying, listen, on balance, is it a net positive? Is it a net neutral and a net negative? And when you look at Tesla, first and foremost, they are a battery and technology company that happens to make cars. That's a big advantage. They have a big first mover advantage there. That being said, they got a lot of challenges, right? Demand, we've heard about China slowing down, whether it's COVID or demand, we'll see. Here in the U.S., they had 100% share starting, so it can only go down. But it is going down. But importantly, under $50,000, they don't have a product. That's where the growth is going to be going forward as you shift from early adopters to mass adoption. So that's going to be a challenge for them. And then you have the whole situation around the CEO focused. I mean, in the auto industry, it's a 24/7 job. And you're focusing every day on your team around the world. How do you improve efficiency? How do you improve sales? How do you improve the product? And with Elon Musk, he's got a lot of balls in the air. And then you have to ask the question, because, it was a startup that now has grown to the volume that it has, not every decision can come up to the CEO as it has.
Right.
So you have to ask yourself the question, what's the decision making there if the boss isn't there full time?
So we were chatting during the break, and I want to give the audience a glimpse at how a former auto CEO researches another auto company. You went on the Tesla website, and what did you find, and what did that tell you about Tesla?
Well, when you look at demand, I mean, a year ago, it took 9 months if you wanted to specifically order a Tesla. I hopped on the website today. Inventory that's available, you can literally get a Tesla in the next couple of days. And oh, by the way, they're giving a $3,750 bonus if you take it before the end of the year. Now, if you specifically order one, they're saying in the next 60 days or so, you can have your Tesla. So that's saying something about the demand for the product going forward. But that being said, they're going to continue to grow because the whole industry is going to shift towards EVs. So even as their share comes down, and even if they have some issues, they're still going to grow. So it's not the end of the world for them.
Mark, 22 years ago, Ford was a $14 stock. It's rallied. It's a $14 stock today. GM, you can make the same argument. Why doesn't the street reward these companies for being better companies than they were 5, even 10 years ago?
Well, that is a frustration. I mean, at the end of the day, I think investors are looking at the established automakers and saying, listen, for many, many years, you basically weren't value creators. But since the Great Recession, you look at Ford, you look at, obviously, GM and Chrysler, now Stellantis, as they've come out of bankruptcy, et cetera. They've created a lot of value since the depths of where their stocks were. Their balance sheets are strong. The management teams are battle-tested from the Great Recession and things of that nature. What we couldn't get credit for is all the investments we were making in EVs and the software content on our vehicles, because my view, there was always a view, hey, you're a manufacturer. Can you really get that? And I think a lot of the companies are proving that they can. You look at Ford with their Mach-E, their F-150 Lightning, their Transit. These are really, really good products that have a lot of software content. They're EVs. And at some point, I would think the market is going to reward that, particularly in an environment where we're coming off, startup companies that were rewarded with, a prototype and a business plan, and they got a multiple 3 times what the established OEMs were.
So, Mark, obviously big personalities have been associated for 100 years with the auto industry. We had the Henry Ford, we had like Lee Iacocca, you had some of these guys or whatever. So, Elon Musk is obviously playing off a lot of that. And I think that there's been a lot of enthusiasm about him and what he's been able to do in the auto industry, pushing it faster towards, EVs. But when you think about the stock right now, and obviously you think about the stock a little bit here, it sounds like, it's down about 60% in the last year. It's lost more than $500 billion in market cap, and it just closed at a new 2-year low today. And you think to yourself, there was a time where if we woke up to an announcement that Elon Musk is no longer the CEO of Tesla, the stock would gap down 20%. At this point, it really feels like it might gap up 20%. Talk to me about the cult of Elon Musk in and around this story.
Well, at the end of the day, if you look at the composition of ownership of Tesla stock, it has a large retail portion. And so a lot of people bought into, Elon does a great job. He's done a terrific job of moving the industry towards EVs. There's no question about that, and build a very strong brand in the process. But they bought into his story about growth going forward. Now what you have is a situation where, growth is a bit questioned, right, given that they have all this capacity coming online in 4 plants around the world and what's going on with the marketplace. But I think the other thing is he is so associated, as a CEO, he is so associated with that brand that the positions that he's taking on social and political things, on balance, that is a net negative for a company. I mean, when I was running Ford or any CEO today, you have to pick and choose what either social or political issues you dive into. And they have to be very tied to your values as a company. And maybe it's one, maybe it's twice a year, but no more than that. But if you're diving in on every single thing and you got opinions on all sides, that is going to hurt the brand image in some form or fashion.
Mark, thanks for coming by. Come by anytime. Mark Fields,
thanks.
CNBC contributor. All right, here is the question, though, ultimately. Tesla is trading at a forward PE that is the lowest ever. We have not seen this forward PE ever in all of Tesla's history. So would you rather, Steve Grasso, Tesla or Ford?
Well, it's interesting you say that. I think because it's been so beaten up, I would have to go with Tesla. And what Mark said about being able to get a car in 6 days or a month, isn't that a good thing? Isn't that a supply chain tailwind right now? I'm going to go Tesla's been so beaten up. I'll go with Tesla for 500, Jack.
Who's Jack?
I don't know. Not me.
I don't know.
Bonawyn, what do you say?
Yeah, I'm on the same page. From both, particularly from a trading standpoint, I just think, one, it's a higher beta name. It's come off so much. Whether you buy into the Elon story and his distractions and things of that nature, I still think there's a massive retail following. It's still a strong product. And at the end of the day, consumer brands are about brand loyalty. And I still think there is, despite the brand erosion that's happened there is still a loyal following there. So, particularly for a trade, it would be Tesla for me.
Gee, I wonder what Dan thinks.
Yeah, I disagree with all of that. I think the brand stuff's getting worse. I actually think there's a very good chance that he's not going to be the CEO of this company a year from now. And I also think that ultimately might near term be a positive. It might release some pressure on, I think, longer term. That's what kind of makes the valuation come back in line with some of its peers, especially as they are gaining market share. So to me, if you're telling me over the next 5 years, I'd much rather be long Ford than Tesla.
You want to see how we tie a ribbon around things here?
How do you do it?
On CNBC's Fast Money, 5 o'clock. Argentina won today. They beat Croatia.
Yes.
Mark Fields ran Ford's operation in Argentina in 1986. Look at that just neat little package for you, Melissa.
It's amazing. Those are just random things.
No, it's not random.
Together.
The guy's a badass. I mean, he gets things done.
But I think that, talk about tying a bow on it, you nailed it. Ford's done nothing for years and years and years. And the problem is it's a behemoth. How does it offer? It can't pivot to a point where we're selling EV trucks. It's got too much weight carrying it down.